Okay, we start now. So, welcome to FSM1 webinar, where we help investors invest globally and profitably. My name is Harriet, Client Investment Specialist from FSM1, and I am the MC for tonight. So, Trump's Revelation Day's announcement on 2nd April, unveiling reciprocal tariff, sending shockwave to the global markets. So, it is not just targeting the China, but mass of the world. So the markets are thrown into chaos as Trump turns on the traditional US allies as well. The global political landscape has been reshaped rapidly in the weeks. So in this session, RHB's Asset Management General Berhad, Mr. Tan Jitun, will explore the changes geopolitical and financial landscape and how China will be impacted by the recent events. He will also explore the sector and investment teams that they believe will do well despite of these volatile times. Mr. Tan Jitun joined RHB Asset Management Singapore in April 2018 as the Chief Investment Officer, where he is responsible for setting up the investment and research processes, team structures, investment strategy, and product strategy for the regional equity products. So he has over 25 years of experience in the investment industry, managing the multi-million equity and multi-asset portfolio on behalf of sovereign wealth, pension plans, endowment, insurance, and retail clients. Mr. Tan holds a Bachelor of Business degree honor from Nanyang Technological University, majoring in applied economic with a minor in banking and finance, and has been a CFA chartered holder since 2002. So now, without further ado, let us welcome Mr. Tan and stay with us until the end of the interesting webinar, and we have the exciting perks going on. Mr. Tan?
Before I start, a big thank you and a warm welcome to everybody who is joining us on this evening. Please do allow me to share my screen. Okay, so the title of tonight's presentation is Terrifying the Market. So out of the deal versus the out of war. So I think right now, I'm sure everybody is well aware of the tariff war that is going on right now. And obviously, Trump is saying that, he's with his out of the deal or the book that he has written, he is the master of negotiation. And on the other side of the table is obviously Xi Jinping. And that's where most of the tariff are being targeted against, which is China. And I guess my point of view is that, from in Xi Jinping on China's side, we have the out of war. And on the Trump side, we have the out of the deal. So who will prevail in the end? So I think this is obviously the question that is that the whole market is worrying about right now. And I do think that there's no simple answer, honestly speaking, to how this tariff war will eventually end. But tonight, what I hope to do is give everybody a bit of understanding of some of the key implications of this tariff war that has just happened. And also, more importantly, I do want to touch on the fact that despite all this tariff war that's happening right now, I think China are in charge of their own destiny, because there are very, very interesting drivers and themes that are playing out in China right now that I think will drive China's stock market even higher. So this is some of the themes that we will explore today. Okay, so I'm sure on this slide here, everybody's well aware of this very famous picture of Trump holding up the reciprocal tariff. And as you can imagine, the tariff was also hiked up to as high as 145% by the middle of April. But as quickly as the tariff went up, there was also new developments there. There was a 90-day pause. And at the end of the day, currently what we are looking at is the US tariff on China goods stands at roughly about 30%. And from China perspective, China is imposing 10% tariff on all US, right? So this is what is going on at this point in time. There's a 90-day pause. So having said that, this is just, I think, the very, very start of this whole tariff war between these two countries. And like what Harriet has mentioned earlier, what is more important is that this time around, everybody, was expecting the tariff to be directed against China, but unexpectedly, the tariff war was actually against everybody else in the world as well globally, right? So this is a major departure from what investors and everybody else in the world was thinking, right? When Trump very proudly said that something big will happen on Liberation Day, which is the 2nd of April. Okay, so what are some of the key takeaways, right, from this US-China tariff war? And at the end of the day, who will prevail? So who will win this tariff war? So I just want to highlight once again, this is obviously a very, very complicated question. And the tension between US and China is probably here to stay, right, for the foreseeable future. So I think tariff war is just one aspect of it. But I would like to point out some of the key takeaways from the Liberation Day tariff that we have seen. Okay, and the first angle that we want to look at is from the financial market perspective, right? What is the financial market saying at this point in time, right? So on this slide here, what I have done is I've highlighted the year-to-date performance of different region, different country, equity markets, year-to-date performance as of 21st of May 2025, right? As you can see quite clearly here, China is up roughly about 17%, Europe is up 22%, Japan is up 8%, ASEAN is up roughly about 7%, and States or US is actually down, right? You can see quite clearly here, if you compare the US equity market in terms of year-to-date performance across all the major regions and countries that I have highlighted here, you can see quite clearly that US equity markets is indeed performing quite poorly. Okay, so the equity market on a financial market already is giving US very poor marks in terms of the performance of the US equity market. And moving on, what I would like to highlight here is the US dollar. All right, the US dollar, we are seeing an unusual weakness in the US dollar. As you can imagine, right? Post-Trump 2nd of April Liberation Day, the market was in a turmoil, right? Typically, when the market is in a turmoil and there's volatility in the market, US dollar is usually a safe haven, right? Meaning US dollar tends to strengthen, right? Tends to strengthen when there is crisis or when there's volatility in the market. However, during this 2nd of April Liberation Day or after the 2nd of April Liberation Day, you can see quite clearly that the US dollar is in a downtrend, right? So, and which is once again unusual, right? It's an unusual phenomenon that we are seeing. Despite times of crisis and in times of trouble, US dollar is weakening. So obviously the market is signaling that there are obviously underlying concerns or issues in the US. And moving on, we look at another aspect, which is bond yields, right? Bond yields, right? Typically, in times of crisis, once again, or when the market is volatile, typically the bond yields actually goes down because people typically would be buying US bonds because US bond used to be the safe haven, right? But right now, from Trump's 2nd of April Liberation Day onwards, you can see quite clearly the trend of the US bond yield is on this way up, and up is usually not good. Why? Which means people are actually selling down their position in the US bonds, right? As a result of that, when they are selling down, prices of US bonds would go down, and therefore bond yields tends to go up. And that is obviously not good at all, especially from the perspective of the Americans. Because we all know that Americans or US has a lot of debt on their books. So if interest rate or bond yields are going up, then they have to pay a lot more interest, right, on their underlying debt. So that is obviously a not a good problem if you're American, right? So from what we can see here, once again, right, there's unusual spike in the US bond yields in terms of crisis. You can see the yields going up. So once again, right, it is showing that there are signs of underlying problem in the US financial market, right? So you can see, right, whether be it you look at the equity markets, you look at the bond markets, you look at the currency market, they're all showing one thing, that there are issues underlying in the US, despite the fact that Trump has proudly proclaimed that 2nd of April would be Liberation Day for the Americans. But obviously the market is interpreting it in a very, very, very different way. Okay, next, the other angle that we want to look at is this. So who will be affected more? Is it the US or is it China or is it countries all over the world? So who will be affected more because of this tariff war, right? So I just want to highlight here on this slide here, I just want to highlight in terms of the news flow and in terms of the headlines, right? These are all American newspaper or American TV, right? You can see that in terms of their headlines, it's very clearly said that Walmart and Target CEOs, right? These are major CEOs of major grocery chains in the US. They supposedly have privately warned Trump that the tariff could lead to empty shelves soon, right? So that was the headline from CBS on the 22nd of April. And a lot of people are saying that this is one of the main reasons why Trump also walked back on a lot of his tariff threats, right? However, the other thing I just want to highlight to everybody is, if you can remember, Trump used to say that the tariffs were all paid for by other countries, right? By other countries. And then the Americans, would not be affected. But if you look at once again, the headlines this time around from CNN, you can see Trump actually tells Walmart to eat the tariff because the retailer, Walmart, is saying that they expect prices to rise because of the tariff. And yet Trump is telling Walmart to eat the tariff, right? So as you can imagine, if you are Walmart and you are a listed company, would you eat the tariff or not? Or would you have, at some point in time, have to pass down the tariff to the consumers, to the end consumers? So these are all the considerations that they have to think about, right? So I just want to highlight that, there is real impact on the ground in the US after Liberation Day. Okay, and moving on. So for those of you who want to be a bit more technical, so on this slide here, what I have done is I have highlighted this very, very interesting study that is actually carried out by the Federal Reserve of San Francisco. So the Federal Reserve themselves would do their own analysis because supposedly they are independent, right? They're independent from the administration or the government of the day. So they will do their own analysis on what is going to happen to the US if there's tariff. So in this very important study that was actually released on the 19th of May, so just a few days ago, the Federal Reserve of San Francisco actually said that if there was a 25% tariff, right, then there will be a 10% increase in prices for investment goods and roughly about 2+% for consumer goods, right? So once again, right, there will be an impact on inflation in the US because of the tariff. And once again, that's why I want to highlight that it's not a newspaper, it's actually the Federal Reserve of San Francisco themselves who are coming up with this analysis to show the Americans that the tariff would have an impact on their lives and the tariffs will have an impact on businesses because prices of investment goods that are mainly used by the industry and businesses and the prices of consumption goods, which are obviously used by consumer, will be impacted because of the tariff. Next, I also want to and do some analysis in terms of the impact of the US tariff to other countries. So first and foremost, I just want to highlight China here. You can see I've bolded the share of US export as a percentage of total China GDP is only 2.8%. Meaning, if let's say there is zero US exports from China, right? Then the impact on the economy of China is only be just 2.8%. Zero exports from the US, from China to the US, right? The impact on China is actually very, very low, only 2.8%. We also know that that's not possible, right? For there to be no China exports to the US, because end of the day, China is still the factory of the world, right? So, but from China's perspective, and you can imagine that is probably one of the data that they are seeing, and that's why they are trying to be so tough. Or rather, they are able to be so tough because they know, right? They know what cards do they have, because the impact on China, right? If there is a complete ban on US exports from China, the impact to China is going to be very, very small. Okay, however, I just want to look at it from other angles as well. There are countries out there in the world, like for example, the likes of Vietnam, Cambodia, Taiwan, their GDP, right, would have a bigger dependency on US exports. Like for example, Vietnam and Cambodia, close to 20+% of their total GDP is dependent on US exports. So that's why for them, they will have an outsized impact. And next on the list is actually Taiwan, right? Because we know that a lot of electronic, the semiconductors, and electronic stuff are actually manufactured in Taiwan. And a lot of these are also being exported to the US. So the impact, right, on Taiwan is also quite big, roughly about 14%. So on this chart here, I've highlighted all the different countries and what is their respective impact because of US exports. So the point I want to highlight here is, from China's perspective, the impact is actually quite small, okay, relative to their size of their huge economy. Okay, and moving on, I also want to highlight on this chart here. So how important is US or China to other countries all over the world? Okay, so on this chart here, okay, what I've highlighted is two different time periods. One in year 2000 and the other one is year 2024. Okay, so for all the different countries in the world, right, if let's say US is their largest trading partner, then it will be in blue. If China is their largest trading partner, then it will be in red. But as you can see, in year 2000, for most countries in the world, right, US was their largest trading partner, and that is in year 2000. But things are very, very different now. If you fast forward to 2024, you can see on this chart here, for most countries in the world, right, China is actually their largest trading partner. And if you look at the countries, in fact, that has US as their largest trading partner, you can see quite clearly here, it's Canada, it's Mexico, and certain parts of Europe. But unfortunately, during this tariff war, you can see quite clearly that Trump is obviously not sparing this country as well. Canada, Mexico, and Europe, right? They are all his targets as well, right? And that's strange, right? Because traditionally, these countries were supposed to be his closest allies, right? So I think from this chart here, it also shows very clearly, if countries were to be forced to choose a side, how would they choose? What are the considerations? Considering now in 2024, China is actually a larger trading partner than the US for most countries in the world, right? Okay, moving on. The third aspect that I want to touch on tonight is this: soft power, right? Soft power. We've talked about the markets, we talk about trade. Now we talk about soft power. My view is, during this whole tariff war, China actually gains in terms of soft power, and obviously at the expense of the Americans, right? On this chart here, on this slide here, once again, I'm showing some headlines from international and US news outlets. NBC said, Trump suggests that he could use military force to acquire Panama Canal and Greenland and use economic force to annex Canada, right? So this was obviously a key headline, right? That was in the start of the year, right? And so typically Greenland or Denmark or Mexico and Canada, once again, they were supposed to be his strongest allies and neighbors, and yet Trump is going after them, right? And conversely, if you look at the Reuters recent headline from 19th of May, just a few days ago, it says that China fully respects Denmark's sovereignty over Greenland, and which is quite weird, right? Because supposedly Denmark, which is part of NATO, is also very worried about China, and yet China has to assure Denmark that they are the ones that are respecting Denmark's sovereignty over Greenland. So once again, it's quite clear from the headlines alone, you can see that there is very significant power shifts, right, amongst all the different countries in the world. And once again, let's talk about closer to home. Trump, I think he must be, he doesn't realize what the impact that he has, right? So we have on this slide here, you have headlines. Once again, you have South Korea, China, and Japan, right? Obviously, we all of us here are very familiar that South Korea and Japan have a very difficult time with China from a historic basis. But because of what Trump has done, all three countries are agreeing to promote regional trade, right? So Trump has once again, right, and probably unintendedly, he has managed to bind all these three countries closer together more than ever, right, from his tariff war, right? So once again, this headline just came from Reuters, and this is dated March of 2025. Okay. Next, there's also a power shift here from his traditional allies like the EU. The EU leaders are planning to go to Beijing in July for a summit with Xi Jinping, right? So you can see quite clearly they are also very worried, right? So what are plans? What are Trump's plans for the EU or for Europe? I guess they are also smart enough to understand that they probably need to diversify, right? Trying to make peace with China as well. So that's why all the EU leaders are trying to plan a trip to Beijing in July to have a chat with Xi Jinping. Okay. Next, even closer to home, right? Between ASEAN and China. So I'm sure all of us are well aware. Xi Jinping actually came to our parts of the world, went to Malaysia, went to Cambodia, went to Vietnam, and they signed a whole host of deals with China over his three-country tour in April. So we can see even our parts of the world, right, are trying to draw closer to China, right? So once again, my point I want to highlight here is this: soft power shifts is already happening, right, because of this tariff war. Okay. Next, this is something recent. So once again, it just happened just very, very recently. I'm sure all of you have heard about this. Trump administration blocks Harvard University from enrolling international students. That created a big hoo-ha, right? So obviously they are contesting this and they're trying to bring it to the courts, right? But I think the impact is obviously bigger than just Harvard, right? Because I think it obviously strikes fear in all international students who are studying in the US at this point in time. You can start with Harvard, then where will he end, right? So this is indeed worrying. So once again, right, from a soft power perspective, things are changing, right? Things are changing, and obviously China is very smart. China is opening up, and then even Hong Kong University are saying that those people who are not welcomed by Harvard University, they're more than happy to accept these international students in China, in Hong Kong, right? And the other thing, just very recently as well, Trump threatens 50% tariff on EU and 25% penalties on Apple. But fortunately, right, just over the weekend, just a couple of days later, Trump reverses his 50% tariff on the EU. And that's one of these hallmarks, right, of Trump administration over the course of the last 1 month or so. There's a lot of flip-flops. There's a lot of flip-flops in terms of his tariff threats, right? So these are things that the market will have to contend with. But all in all, right, I think there's obviously more uncertainty in the market, and as a result of that, right, I think there are very significant soft power shift. And in fact, if you think about it, over the course of the last few months, it is China, right, which is stepping up to the plate and trying to provide stability to the global economy. Okay, and moving on, I also want to highlight very quickly that despite what is happening on the global stage and what's happening on the macro front, right? China is in fact progressing very, very well on key themes and key industries that they are very strong in. And this, I think, will propel China stocks to even higher levels. Okay? What are these few key themes? For me, one of the most important key themes that we have seen in 2025 is the deep seek theme, right? So for those of you who may not be aware, DeepSeek is obviously a Chinese AI company, right? All of a sudden they came up with this AI program called DeepSeek, and that was indeed a very, very significant moment because with the emergence of DeepSeek, US stocks started plunging, and that was at the start of the year during the Chinese New Year period. That's when the US stocks started plunging. And not only that, it does have a big impact right outside of that as well, because even Goldman Sachs, right, as reported in the South China Morning Post, is saying that DeepSeek AI emergence will lead to 200 billion investments into stock because of this DeepSeek theme, right? So even the American banks are saying that DeepSeek is a very, very significant development for the Chinese equity market. And we'll explore why we think that DeepSeek is indeed very, very significant for the Chinese stock market. The first one is this. DeepSeek is China's answer to OpenAI. And OpenAI is obviously the flag barrier of AI for the Americans, right? However, with DeepSeek, right, it certainly threatens the supposedly US AI leadership. It proves to the world that the battle for global AI leadership is just starting. It's not clear cut that Americans have already won. So in fact, it's still very early days yet, because just a very, very new China AI startup, right? It's supposedly as good as OpenAI, and not only that, it's very, very much cheaper, right? And not only that, it also highlights the fact that because it's so cheap, right? And then why are the Americans spending billions and billions on AI? Because with the emergence of such a low-cost AI competitor, totally wiped out all the billions that are spent by the US tech, right? So the point I want to highlight here is this: OpenAI, which is the flag barrier, supposedly the winner, right? If you were to ask all the tech specialists late last year, who's going to win the AI war, people will say, oh, OpenAI, it's going to be NVIDIA. But I think the answer to that question is not so straightforward, because we have the emergence of DeepSeek, which is a Chinese AI company. Next, the other important significance of DeepSeek is this. We all know that over the course of the last 5 years or so, from Trump to Biden and now back to Trump again, they have been trying to prevent the US technology from being used by Chinese technology company. So by right, DeepSeek should not have happened, because technically speaking, Chinese do not have the cutting edge technology or the cutting edge chip. But why is it that we have the emergence of DeepSeek? Because it's quite clear to the market right now that there is a non-American solution to AI, right? So you can see here from all the different headlines, you can see, right, how people are speculating how DeepSeek was able to outsmart America, right? Because there was supposed to be export control, and yet DeepSeek was even better or as good as OpenAI and much, much cheaper. How did the Chinese achieve this? And it's also another headlines here from BBC, right? And they term DeepSeek as AI heroes from China. They overcame US curbs to stun Silicon Valley, right? You can see quite clear that with the emergence of DeepSeek, it's quite clear that the dependence on US technology has been lessened considerably because they are able to come up with DeepSeek themselves without any American or US technology, right? So the self-sufficiency, all right, theme is actually quite clear. Next, what is also more importantly is this DeepSeek, right? Because it's a Chinese AI company that was able to produce an AI solution at very, very cheap cost. Actually, DeepSeek is given to the world for free, right? And that is obviously have big implication all over the world and especially in China. And I want to point out your attention to this headline here. AI model DeepSeek is being integrated into smart TV by Skywolf. So for those of you who may not be aware, Skywolf is actually a Chinese brand that produces a TV, right? But if they were to produce or try to come up with AI model on their own, it's going to be very, very expensive. But however, it's a free gift from DeepSeek because DeepSeek is able to give AI model for free to everybody in the world. It's not just constrained to the Chinese. Americans, Singaporeans, Malaysian, everywhere all over the world are able to use DeepSeek model, right? And because of that, Skywolf, which is a TV company, is able to incorporate DeepSeek into their smart TV. And I'm sure all of you are well aware, the Chinese are very good at this, right? They are very good at incorporating new technology, advances very, very quickly into their local products, right? So it's quite clear here that just within a very short period of time, imagine, right? Chinese New Year period, DeepSeek was introduced to the world, and by 17th of February, just 3 to 4 weeks, right, it's being incorporated into actual products, right? Okay, the other thing I want to highlight to everybody is this, right? The Chinese chip makers and cloud providers, they are also very, very very, very energized by the emergence of DeepSeek. So as a result of that, they are rushing to embrace a homegrown AI solution, right? Because previously there was only ChatGPT, Llama, and all that. These were all US American AI solution. Obviously, the Chinese chip makers or the cloud providers are not able to use that technology. But now it's a different story altogether because DeepSeek is made in China, right? So, and as a result of that also, the whole technology sector in China is also being galvanized. And the government is also well aware of that. So they're giving a lot of policy push towards all this utilization of AI technology in all the different parts of the China technology sector. Okay. And the other thing I want to highlight to everybody is what is exciting about the AI world is I can summarize this in this chat. So previously, over the course of the last few years, right, before DeepSeek, all the investors were all talking about semiconductors, the NVIDIAs of the world, the TSMC of the world, or they're talking about the big American technology companies. So a lot of the investments were all focused on this part here, which is the top part. But because of the result of DeepSeek and to a certain extent ChatGPT and all the AI models, right, the investment universe has actually expanded. So from our perspective, right, it has flowed from just the semiconductors and servers. It has now flowed into software, the hardware, the internet platform, the cloud providers, and more importantly, right, to all the different verticals, right? Different verticals means in all the different industries who are able to utilize AI. That may include financials, the biotech, the automotive industry, consumer electronics, and that's where the Chinese are very, very good in, right? So I think that's the exciting part because investment used to be very concentrated in just the semiconductor, but because of so-called free AI models from DeepSeek, all this technology is given and being empowered to be used by all the different verticals, right? So I think that this is what I think it could be called a very important DeepSeek moment for the Chinese equity markets. And moving on, the other aspects that we are very, very excited on is human robotics. So on this slide here, what I've done is I've just did a screenshot of the Chinese New Year Gala or the Chun one, right, in China. So that was on, once again, late January, the Chinese New Year's Eve. And what was significant, for those of you who may have seen this online as well, human robotics, or human-like robots, right? Humanoid robots were actually performing on stage with real human dancers. And this is the first time that we have seen how these humanoids robots are able to interact and are able to dance. And from once we saw that, we knew that this is probably going to be a year for humanoid, because this is also Chinese way of showing off to the rest of the world how advanced their humanoid technology is, right? So I do think that is a very significant moment, right? So on this chart here, what I've highlighted here is a Tesla Optimus robot, right? So for those of you who follow this closely, you will know that Tesla is also producing robots. But what a lot of you may not be so familiar with is a lot of these companies that are producing all the different parts of Tesla Optimus robots. These guys are actually Chinese company. So Chinese companies themselves are heavily involved in building all the different parts of the robot. And obviously Tesla is obviously assembling the robots in America. But the point I want to highlight to you is a lot of these parts, right, are actually produced by Chinese companies. Okay, so we think that definitely this humanoid robotics theme is indeed very exciting. I'm sure we're going to hear more and more of this, right, over the course of the next few years. And that's where we have also focused our attention and our investment in. Okay, and moving on, the other subsector that we are also very, very interested in is the electric vehicle segment. So currently, right now, China actually accounts for more than 2/3 of all EV sales globally. So on this chart here, what I've done is I'm showing everybody all the quarterly electric vehicle sales by region, right? All the way from 2021 to 2025. You can see the orange bar here. Right now, right, the orange bar are actually sales in China. The blue bars are sales, EV sales in Europe. The green one is States, right? And the green is the rest of the world. So we can see very clearly over the course of the last few years, China accounts for the majority of electric vehicle sales in the world, right? Consistently over the last few quarters. So right now at this juncture, China accounts for 2/3 of all EV sales globally. But on this chart here, I just want to highlight another key chart, which I think is very interesting. Okay, China actually accounts for 70% of global EV production. Because in the earlier chart, I said that China accounts for 2/3 of EV sale, but China actually accounts for 70% of global EV production. All right, why is there a discrepancy? It's because China actually exports a lot of these electric vehicles over the world. I'm sure we have seen a lot of these BYDs on the roads in China, because China actually accounts for 40% of global exports, right? You can see quite clearly here that China accounts for 40% of global exports. Okay, and this is one of the key themes that we like. Okay, and so on this chart here, I very quickly, I just want to highlight some of the key themes that we have in our portfolio. One is, like what I mentioned earlier, is DeepSeek. Artificial intelligence, I think, is here to stay, right? We think that the DeepSeek has fueled a surge in China AI demand across the entire value chain, and government policy is trying to push AI, right, in different aspects of the economy, right? We like that, and we also we like the consumption as well as Internet of Things, because I think with AI, I think a lot of this consumer goods will be incorporated with AI, because like what I mentioned earlier, DeepSeek is actually given free to the world. So if you are able to use AI to be incorporated into the consumer electronic products, you are free to do so. You don't have to pay any royalty to anybody, right? So this is China gift to the world. And as a result of that, we are also very excited about clouds, data centers, and also cloud, right? Because obviously with AI, data centers and cloud are important aspects of this AI rollout. And like what I mentioned earlier, for the last two, we're obviously very, very excited about the robotics segment and also electric vehicle segment. And some of the key themes or portfolio strategies that we have embarked is this. We think that DeepSeek is here to stay. The DeepSeek rally is real. We have more than 55% exposure to the Chinese internet space, the technology space, and AI-related plays. We are obviously very, very positive on the China artificial intelligence sectors because we think that they are as good, and in certain aspect, even better than their American counterpart. And because of what DeepSeek has done, we think that they will lead to more China-led innovative AI investments. And I guess as a result of that as well, we are also very positive on the China technology sector, right? This self-reliance and self-sufficiency technology plays, I think it's here to stay, right? It's important to highlight that the US technology restrictions have been on China for the longest time, and yet we have seen numerous breakthroughs in deep technology sector. So I think our point is that I think Chinese are very smart and able to circumvent this US-led technology restriction. And also, we are very excited about the Chinese internet stocks. We think these are high quality. They will benefit when equity flows come back to China. We are also very excited about the China consumption play because there is strong support from the Chinese government in order to transform the Chinese economy from an export-led economy to a consumption-driven economy. Okay, and like what I mentioned earlier, robotic stocks continues to excite us. And last but not least, in terms of green policy beneficiaries, the likes of EV, the likes of solar, the likes of wind, these are sectors that the Chinese are self-sufficient in. They do not actually need, right, other countries for support. They are self-sufficient in terms of the related supply chain, and they can build electric vehicles on their own. They can embark on their renewable strategy on their own without help from anybody. So I think these are some of the key themes that will continue to drive the market over the course of the next few years. So these are some of the themes that we have played. And with that, I've come to the end of my prepared remarks. And maybe I'll now hand it over to Harriet, and maybe we can take some questions if we have there's any. Harriet, over to you.
Okay. Thank you, Mr. Tan, for your very insightful presentation. We are now open for the Q&A sessions. Yeah, Mr. Tan.
Yes, let me take a look at some of the Q&A.
Yeah.
Okay.
There are three questions there.
Yes, so let me answer one of the more interesting ones is which market have higher probability of upside for the next 6 to 12 months, US or China? So in my opinion, I think China would have a highest probability of upside. Why? Like what I mentioned earlier, I think US is undergoing a lot of stress right now as a result of what Trump is doing, right? You can see it happening in the financial markets. You have seen it, like what I highlighted earlier, you have seen it happening in the US dollar market. US dollars is weakening across the board. You have seen bond yields spiking for Americans. And that's bad because bond yield spiking means interest rates that the Americans are trying to will have to pay is increasing. And that's not good because they are heavily indebted. Right? They're heavily indebted. So if the interest rate goes up or the yields goes up, then they have to spend a lot of their wallet space, right, to pay interest, even before they even talk about paying down their principal. And if you look at the bill that is being passed right now, right, supposedly Trump called it the big beautiful bill, right? That one is actually very bad for the fiscal situation in the US. It will drive US into more debt. But Trump really wants it. And not only that, they are cutting the taxes for the people, right? So that's not good at all. So that's why one of the main reasons why the yields are going up. Last but not least, and one I mentioned earlier, you can see quite clearly that already the US market is showing signs of weakness, right? And once again, because of these reasons, right, and also more importantly, I just want to highlight this. If you look at the equity markets over the course of the last few years, you can see quite clearly that US dollar has been super strong trend. Okay, apart from this year, apart from that, it has been a super strong trend. Not only that, the Mac 7, the Magnificent 7, the US equity market have done very well over the course 2 to 3 years. So you can see quite clearly that because of the markets have done so well, it's also quite easy to extrapolate that a lot of people are invested in the US. They are overweight the US equity stock market. But because of what Trump has done, right? And then people have to revisit, right? Do I want to be so exposed or not to the US? Right? Do I want to be so exposed to the US? And I've already made so much money in the US. What do I want to do next? Right? So these are questions that people are asking themselves. And also, more importantly, is also this. If you look at all the tariff and all the actions that Trump has targeted over the course of the last few months. Obviously, the US-China tension has been going on for the last, 8 years or so. So that's not new. But what is new is Trump targeting Europeans, Trump targeting Canadians, right? Trump targeting their own allies, even to the likes of the Japanese, the Taiwanese, because they are also under tariff. These used to be their traditional allies, and because they're traditional allies, they are the ones that is buying the US bonds. They are the ones that are buying US assets. But now if Trump is openly trying to target their allies, what would the allies do? What would be inside their mind? Right? My view is they are already very invested in the US. They might be thinking they are over invested in the US at this point in time, and he's targeting me. What should I do? If I got incremental amount of money, where would I put my money? Would I put in the US, or would I go to other parts of the world? I think these are the questions that a lot of investors all over the world, right, outside of the US, are thinking. Right? So if your best friend from kindergarten now turn against you, what are you going to do, right? What are you going to do? So you look at the saying, right? The enemy of my enemy is my friend, right? So if US is targeting China and you have to distance yourself from the US, where would you go? Right? I think the logical answer is what I highlighted earlier, the soft power shifts, right? So a lot of countries are also trying to improve their relationships with China, right? So all in all, I think these are the main reasons why I think that from a lot of different perspectives, right, I think the money flow will go towards China. And last but not least, just before I forget, is that if you look at the comparison between these two markets, US and China markets have been quite weak for the last 2 3 years. Last year was pretty much a good year, but it only started last year, especially the late part of last year. But prior to that, right, China market has been quite weak. US market has been strong. It only started to come off very, very recently, right? So the discrepancy between valuation between these two, I think will make investors rethink their solution. Maybe they will sell the US and even go to China. So even enough for people think like this, then obviously I do think that China will outperform US in the next 6 to 12 months. Okay? So the other question related to that is also in terms of technology sector. So which of the technology sector, whether in the US or whether in the China, will tend to do well? So I personally like the technology sector. However, I once again just want to highlight what I mentioned earlier, right? The difference in the performance of these two markets is very, very stark, right? US has performed very, very well over the course of the last few years, and the best performer in US is obviously the Mac 7 on the technology stocks. China had performed poorly, right? Only last year they started to rally quite nicely in the late half of last year. So I do think that even though I like the technology sector, I do think that I think the Chinese technology sector have a lot more valuation buffer because it's a lot cheaper than the American's technology sector. Okay? Okay. Then the other question that I have now is this, I'll just read it out. When you invest in China funds such as RHB Big Cap China Fund, and we believe that we're actually investing in H shares. Okay? Why H shares and not A shares? H shares have better performance than A shares. Okay, so just want to highlight, it's a very good question. So just want to highlight the RHB Big Cap China Fund, right? We invest in not just the H shares. I have investment in H shares, A shares, and also the Americans ADR, right? These are the three segments of the Chinese stocks that I can invest in. So I'm not limited to H shares only. But obviously at different points in time, sometimes A share will do better, sometimes H shares will do better, sometimes ADRs will do better. So the good thing about RSP Big Cap China Fund is I'm able to invest in all these three separate buckets of Chinese stocks. However, if you were to invest in, let's say, an A share fund, then then you are stuck, because the A share funds can only invest in A share. And the big difference between the A share and H shares is the Chinese internet companies are not on the A share. The likes of Alibaba, Tencent, Baidu, Pinduoduo, all these stocks are all listed in Hong Kong. So this would be either ADRs in the US or to have a dual listing in Hong Kong. So that's why the big difference between the Chinese A share and H share is the Chinese internet giants are all missing from A share. So for the likes of RSP Big Cap China Fund, I'm able to invest into the Chinese internet giants. I'm also able to invest onshore on the Chinese A share company. And last but not least, obviously, some of these Chinese stocks are also listed in the US. So I'm able to invest in those. So that gives me that flexibility in order to provide the best performance for my clients in terms of the RSP Big Cap China Fund. Okay? Okay. Moving on. There's a lot of questions, so let me read through and give everybody in terms of, because I'm also conscious of time, so I will just read. Okay, so this is a very interesting question. US will begin revoking visas for Chinese students. Do you think that the US-China trade deal will be affected and eventually re-escalate? I think this is definitely a very important considerations, right? So I think obviously Trump has threatened to do that, and he may be starting to do so for some Chinese students. We do not think that it will be a blanket revoking of visas for all students, or rather they'll probably challenge it in the courts lah. Okay, so I do think that Trump will press all the necessary button. He will escalate it all the way. We have seen it. We know what is his method, right? He will escalate it as high as he can. We saw the 145% tariff. It makes no difference anymore. Once you are as high as 145%, it doesn't matter whether it's 145 or 245 or 345, because no trade will ever happen anyway. You can escalate to 1,000%. Makes no difference anyway. But obviously, the bigger the number, the more impressive it may sound, right? But we also know that Trump, his style is to escalate it as high as possible and then subsequently bring it down, right, as part of a negotiation tool. So I do think that this is part of this entire process. And bear in mind that if you look at it, how this started is also and part of it is also the Harvard issue, which I've highlighted earlier. It has nothing to do with the Chinese or international students. It's a lot of it's all their own domestic politics as in the first place. So obviously international students, Chinese students are being caught in this crossfire, right? So I do think that we need to separate that, because internationally, I think a lot of international students are in US, so it impact, I think a lot of our friends, in fact, some of our children as well, for those of you who have kids that are studying in the US, so it will have more widespread implication. And obviously, I think this is also causing quite a fair bit of erosion of what I mentioned in terms of soft power. Okay. Next, I just want to move on to another question, which I think is very interesting. Okay, the question is this: comparing China market as compared to Greater China market, which do you prefer and which has a better upside? Okay, so just let me define what are the markets. So for those who may not be so familiar, okay, China markets are obviously China A share, China H share. Greater China, it's actually bigger than that. Okay, so it will include Taiwan as well. We include Taiwan. Oh, I forgot. So Hong Kong is obviously part of China lah. So part of China. So Greater China would include the Taiwanese stocks as well. So this is the key difference between the two. Okay, and within the Taiwan marketplace, Taiwan equity markets is actually very strange, right? Because one stock dominates the entire market. So I'm sure everybody here will know what the stock is. That's actually TSMC. TSMC dominates the entire China market. Okay, and TSMC plus all the technology stock essentially is the Chinese equity market, right? So that is the special feature of the Taiwanese market. Okay, so what has happened over the course of the last few years is because of all the technology and AI play and whatnot, TSMC, in line with what is happening to NVIDIA, has actually gone up quite a fair bit as well. So over the course of the last few years, from the start of Mac 7, from ChatGPT, all these technology stocks has done very well. So the Greater China equity market, in particular Taiwan, has been pushed up because technology stocks have done well. However, over the course of the last few months, you can see quite a few of these Mac 7 stocks, the technology stocks, are actually on a downtrend. Reason is because, like what I mentioned earlier, one of the key drivers of this change in perception is DeepSeek. Because if we were to have this outlook session last year, right? Then if you were to ask me, or what is the common perception of who are the winners of the AI competition, who are the winners of the technology game, then it's going to be quite straightforward. People will say, oh, most people will think that it's the Americans or the Western technology sector because of OpenAI, because of NVIDIA, right? And China is getting controlled, getting restricted. So obviously the more consensus view would be that the Americans or the Western technology sectors would benefit. However, like what I said, because of DeepSeek, right, that whole mirage, right, has been totally been taken apart. Because with DeepSeek, China has proven to the world, you can tie my hand, you can tie my legs, you can restrict my technology access and all of that, they can still survive. And not only can they survive, in fact, they can survive very well because, like I mentioned earlier, DeepSeek is as good, can perform as good as OpenAI when it was launched. Not only that, it was so much cheaper. OpenAI spent tens and billions of dollars, but supposedly DeepSeek only spent $5-6 million. So that's why they're able to give it free to the world, because since I spent $5-6 million, it's okay lah, I give it to you for free, right? So as a result of that, I think technology stocks will have a hard time because they've done so well in the past, right? So as a result of that, if let's say technology stocks tends to suffer, right? And therefore I think the China stocks will be in a better position, and therefore I think they will have a better upside, in short. Okay, so let me choose another questions. Okay, I think this is also very interesting. Okay, so this participant is also asking, okay, this is very interesting question, very, very recent. BYD just slashed the EV car selling prices and triggered concerns from analysts and markets. China market is not improving and caused several car makers' share price to drop sharply. Probably asking me whether there will be another crisis in the EV market. Okay, the short answer is this. Okay, I think that it's actually very normal, right, that they have this kind of price competition. Okay, why I want to say that is because we are still in very early stage of this EV car competition, right? Because there are a lot of EV car brands in China. So if you are the Taiko in the EV car sector, which is BYD, obviously, right? As they get bigger and bigger, because they are selling cars, EV cars, not just in China, but also in other parts of the world. So their profit margin is actually very, very good. So I'm sure they are all businessmen. I'm sure from a business perspective, I'm sure thinking this, right? Since I got so much profits, I don't really need to make all the money now. What do I do with this extra profit since I'm doing so well? And I'm the taiko in the industry anyway. So they are obviously slashing prices to make sure that those people who are behind them are not having such an easy time, right? Because once again, I just want to highlight to you that there are a lot, for those of you who've been to China. So for me, I just recently came back from China. There's so many EV cars, right? There's so many different brands that we have never even heard of, right? So obviously, in my opinion, there's obviously too many. There will be some form of consideration, and the taiko of the industry, or the big brother of the industry, would have to do their part in order to consolidate, right? So once again, I just want to highlight, yes, I think there will be companies out there that will suffer. But the other thing I want to highlight to you is this: a lot of these small little companies, right, are not listed. They are not that important. We don't really invest in them. right? So it doesn't really have a outsized impact on the overall EV market. But there are so many brands out there, so there's no issue about anti-competition and and stuff like that, right? So I think it's a very normal process. I think also BYD is also wanting to expand its market share, because if you can cut prices by 30%, I'm still very profitable. If I increase volume times price, I can still make more, if not the same amount of margin while hurting my competitors. Why not? So I think these are all very logical business moves lah, right? From an industry that is still in its infancy. Okay, so let me answer a few other questions. Okay, I think this is also another interesting one. So from another attendee here, obviously, has got a lot of insights into this. Okay, the question is this: China AI investment rely heavily on vast data sets and strict censorship, the Great Firewall, and data localization law limit access to global information. Doesn't this create an AI bubble where Chinese models are strong domestically but struggle to compete globally due to diverse open data? Okay, very good question. So, but I think the premise is this lah, that I think the AI path in China, and I'll say broadly speaking, the Western world, has already diverged, right? So I think going forward, there's going to be a Western version of AI, and there's going to be a Chinese version of AI. And you are quite right that data set is obviously very different. But arguably, I will say one thing. The Chinese, if you look at DeepSeek, right, they are obviously using US data set as well to train their models, right? In Chinese, being Chinese, they will use the US data set, but they obviously have their own data set as well. And a lot of data set in China are obviously written in Chinese, right? So the Chinese AI models are better, obviously for obvious reasons, are better at using the Chinese or language data set to train their models, right? So if, for example, if you were to ask which is the best Beijing Ya restaurant in China, in Shanxi, for example, right? Shanxi, okay? Obviously, if you ask DeepSeek versus you ask OpenAI, I think it's quite clear lah, which AI model will give you a better answer, right? Because certain models are trained on data sets which are localized, right, for that particular set of information, right? So I do think that I do think that what the Chinese are very good at is trying to localize or use the AI models for the specific verticals, right? Because we know that from the announcement from Alibaba to Tencent to Baidu, they are already implementing AI into their current businesses, and they are seeing very strong results, because that's what the Chinese are very good at, right? They take the technology and they implement it very well. And what is also very special about the Chinese internet economy is it's been dominated by a few key Chinese companies who are obviously fighting tooth and nail amongst each other, but they are very, very different. For those of you who've been to China, you know how powerful WeChat is and how different WeChat is compared to the likes of our WhatsApp, right? And how much more WeChat can do, right? So I think the Chinese are very good from that aspect. So I think that the Chinese will probably concentrate on those and try to monetize it and try to incorporate all the AI into different verticals that they can use. They can use and directly connect to the consumer, right? So I think that's where the more important better is going to be. And when you are targeting that, then local knowledge becomes very important. So if you have all the Chinese data, so that's why if you ask DeepSeek, which is the best Beijing Ya in Shanxi, I think I will trust DeepSeek rather than you trust OpenAI, right? Because obviously the training data sets are very, very different. Okay, so I'm conscious of time. Maybe we take one, Harriet, we take one last question. Let me take a more difficult one. Okay. Okay, I think this is a difficult one. Okay. You have shown us the upside. Can you share what you believe is the biggest blind spot or weakness in investing in China AI, and how would you hedge against it? Once again, very good question. Okay. However, I would say if it's the biggest blind spot for me, definition of blind spot is because I can't see it, so I can't really tell you what my blind spot is, but I think I can tell you what the biggest weakness is, right? At this point in time in investing in China AI, the biggest weakness in China AI right now is still the chip. Because at this juncture, at this very, very moment in time, China is not able to produce the best chip in the world. So this is the current weakness in investing in China AI. However, the mitigation factor is this. If you talk to all the Chinese internet companies, the likes of Baidu, DeepSeek, Tengxun, Baba, they'll tell the same thing. I got enough chip to last me a few years. I do not have to worry. You do not have to worry about the lack of chip. Okay, so the current weakness is the chip. But in the next few years, they have mitigated a large part of it. Okay, but the other thing I want to highlight to everybody is this: AI is not just about the chip, because at this point in time, ChatGPT has been going on for the last 2 years. So you can think about AI effectiveness or how good AI is as a factor of 3 different factors. One is the hardware. Obviously, like I said, right, at this current position, the hardware, China lose. Software, that's where arguably 50-50. So depending on the company that you are looking at. And the other big factor is the algorithm. The algorithm is basically the brain power, right? Human brain power. How smart are you? How nimble are you? And DeepSeek showed very clearly, right? Very clearly that algorithm-wise, software-wise, they are better. The Chinese is better. You can tie my head, like I said, tie my leg, tie my hands. Hardware part, yes, you tie my leg, tie my hand. But software, algorithm, the Chinese are better. So they managed to get around that, you see. So once again, I hope I answered that question in terms of their the biggest weakness in terms of investing in China AI. And how would you hedge it? Quite easy. I think you can do it by either buying some of the Americans key semiconductor companies that are still leading. But I want to highlight one key point is this they are leading for now, right? And if you buy those companies, you are betting that the Chinese will not come up with a alternate solution. So if you look at what Jensen Huang has said, Jensen Huang of NVIDIA is also very scared because he knows that if he doesn't get to do business with China, it's just a matter of time before China develop their own solution, right? It's just a matter of time, right? If that's the case, then he's out of China market forever, right? So he himself already said that. So I do think that these are some of the more interesting things that are happening in the world right now. Okay. With that, I've come to the end of my presentation and also conscious of the time. So maybe I'll hand it over. I'm sure there are a lot of questions. A few questions that I've not been able to get to. I appreciate everybody who have submitted their question. Definitely, unfortunately, we don't have time. And hopefully, we can have another chance to have another session like this. Then I can try to answer more questions. Okay, now I may hand it over to Harriet. Harriet, over to you.
Okay, thank you so much for all the Mr. Tan engagement. Very interesting. So there are still some questions that we didn't get to cover today, so because of the time constraint. Okay, about the promotion campaign that I have mentioned earlier, let me share a screen. Okay, so our registered webinar attendees will receive a 0.8% promotional sales charge campaign code to invest in a selected RHB unit trust included in the event of the invest 1,000 in China unit trust, get 10 ringgit bonus unit from 29 May to 3rd of June. So this campaign code will be sent later by tonight to the email that you have registered. Okay, the first 30 webinar attendees who utilize this campaign code to invest in a minimum 1,000 in a single transaction in one or more RHB unit trust will receive an 30 ringgit touch and go e-wallet pins. So for more term and conditions, please visit our website on this topic. So later then you also receive an email which lead you to this link. Okay, so if you have further questions, feel free to send us an email at investhelp@fundsupermart.com. a replay of tonight's session. Okay, will be available right after this. So you can head over to our Facebook page to catch this replay. So once again, thank you very much, Mr. Tan, for joining us today. And thank you everyone for attending tonight's sessions. Good day, good night.
Thank you, everyone. Thanks for spending time with me this evening. Thank you.
Thank you.